So a couple updates here. First, on the macro side, we have refreshed our nowcast here for Q2. The punchline is that we took our numbers down for growth, not by a ton, but by 7 basis points. We went from expecting year-over-year growth of 1.81 to 1.74. That took our sequential SAAR growth down just about 30 basis points. We went from 202 down to 171. In terms of the incremental data points, we had 16 since the last update, over the last just over a week. And interestingly, 16 of the 16 all worsened on a rate of change basis. So, bear in mind, most of that, almost all of that, is May data. We had expected May data from a consumption standpoint to slow. We had May as a quad 3 on a monthly basis. And there's a variety of reasons for that, but obviously April had some benefit from some tariff-related time shifting. May was obviously on the back end of that and so forth. But as we look ahead, there's a few things that I would basically say keep in mind here. One is that that data weakened a little bit on the margin. Our numbers are still very non-recessionary. However, we do have on the radar our monthly July quad 4 expectations. So obviously keeping everything on a tight leash in that respect. But that's the quick GIP update. We put that note out this morning.
You know how a miner has on their helmet, they have a flashlight?
Yep.
Following Wall Street's forecasts on growth and inflation is like following the miner down the mine shaft with no flashlight. Right? They're still talking, some of them are still talking about U.S. recession risk based on, it's like, see, I told you, I was right. I in my mind, I need to be right. Look. It's like looking at the May data. It's June, dude. It's like, so the signal is the flashlight. The quad over the monthly quads, first of all, we agree, of what they're whining about, that it was a decel on 16 data points. Most importantly, we're looking forward like markets do, right? So it's kind of run its course post-pandemic. All these people turn famous on Twitter. They're like fear mongers and recession mongers with no flashlights. They don't time anything properly. They just tweet, they just talk, they just sell newsletters. And that's what I have to say about that.
Well, I think, helping people understand and put it in context, right? It's like, okay, so here's what the data is doing. But as you said, we're already in the month of June. And by the way, we're now only 3 weeks away from July. So
the way that it should work for them is that they'll capitulate like the street has. The appetite for put buying this morning is like negligible to low. That's all in the tier 1 alpha data. So it's a fade on even positioning in terms of after the move. But by the time they get all the June data, they'll be too bullish. And then the July data is going to start to slow again. It's like just perfect. I love this. This is like the best of the best. Drake keeps reminding me that the machine continues to operate more coincidentally than ever before, faster, sharper, in line with our process, which is why we've been so accurate as of late.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.